Hello everybody. We are live here with our happy hour, and I'm excited because this week is going to be a fun week. Last week Jeff and I got to do our little conversation, which was completely unscripted and unprompted, and one person
hilarious.
said,
It was hilarious.
Oh, it is hilarious.
Yeah.
Somebody said, I can't believe you could talk to your husband that long straight for an hour. I'm like, well, I've talked to him a lot longer than that. So,
Poor guy.
Yeah.
So we have on our lovely call today, or not a call, on our happy hour, our virtual happy hour, which I'm fingers crossing is going to be soonly. Hopefully we get to go to a real one very soon. We have Stephen Wright of the Wright Group from Movement Mortgage. We have Ryan of the Hills. That has always been your name. And he is also, what is your title with Movement Mortgage, my friend? What is that title?
Janitor, whatever you want to call me.
That's not your title. You're like the director of all of Washington State.
Of the mortgages, yeah.
See, that's a big title. That's kind of a big deal.
It's a big title.
When I first started working with you, let's see, Bristol's gonna be 10, and I was pregnant when I met you. So 10 years ago, a decade ago, when I met you, you were just a
wee little
struggling loan officer.
And ouch. Becky saved the day and threw me a lifeline.
And then Sloan, you have been in real estate. So Sloan Hunter is our amazing team leader at R. Keller Williams, which I'm so grateful you are on the call. And I have so much respect for you, and you have been in the industry for a really long time. You've coached up lots of people. Tell us a little bit about where you have come from, your background.
I celebrated in January 30 years, and I joined Keller Williams in February. So it was the perfect timing to take on this new position as a team leader. I didn't even know what a team leader was about 4 days before I accepted the position.
Oh my God.
So,
I'll take it.
Colleen Detmers, our OP, hooked this thing up to my arm, and it was called Kool-Aid, and she just stuck it in me.
Love it.
And but I'm grateful for my history with Coldwell Banker and Windermere. They've been very good to me. They got me where I am today. And so I've been through a couple of these recessions, we're hopefully not ready in a real recession yet, but I'm happy to share whatever I can. Let's get smarter. Let's do this.
Absolutely. Well, and I think I kind of want to gear this happy hour, because sometimes our happy hours are geared towards the consumers. Sometimes it's geared towards our colleagues. And I really want to take kind of this time for any of our friends that might be out there watching us, and as we share this, just to kind of give, I don't know, like whether it's encouragement, inspiration, or just wisdom from the fact that none of us sitting here have, we're not new to this. We're not new to this at all. We've seen it. We've done it. So Sloan, I want to start with you. So you've been in real estate for 30 years, in the industry for 30 years. And where were you at in in 2008? At that point, you've been in the industry, what? I can't do the math. That's 12 years ago. So you were in the industry for 18 years.
Yep.
Yeah. And so in 2008, what were you doing then? What did your business look like then?
I was pretty spoiled at that point. My clientele had, they weren't really the ones that suffered like a lot of people did. They were pretty equity strong, and they didn't have to sell. They didn't have to short sale. But what I did do is see them have to sell off properties, right? So if they had 2 or 3 homes, some of them had 4 or 5. That's where created that inventory of vacant homes that we had to absorb over those years between 2007 and 2010 with a small portion because people had multiple homes. So I had it a little different than some people went through, but I did see a lot of people kind of get tight with their money. And a lot of people that I were working with were the ones that had their money in the banks that weren't releasing it.
Oh my God.
I had clients that had ships full of inventory sitting in the bay, so they were trying to keep their companies busy and keep their employees employed so they could make the mortgages so they wouldn't have to short sale. So it was a little different.
Yeah, that was not my clientele. I was
Me either.
In 2008, I was, let's see, how old was I? I was 26, and all of my friends were barely in college, getting out of college, and no one had money. And yeah, I'll get to mine after Ryan. How long at the point in 2008? How long had you been doing lending at that time? And like, where were you at business-wise? What was that like?
Not long. Tail end of like 04 is when I got in. So I had a little bit of time before it got bad, not much. But yeah, I had the other side of the coin clientele-wise as well. Becky, you and I were talking earlier, and for people that don't know, like Becky and I are brother and sister, and so we bust each other's chops, and our banter, you can see Sloan going, oh my goodness.
I'm the only person who can say some of the crazy stuff I say to you, I swear.
We rib each other a lot, so.
Yeah, they're not really brother and sister.
Okay.
No, we're not really brother and sister. No, but we act like we act like we're brother and sister. Like I can bust on him more. Yeah.
But didn't you realize in that time, Ryan, didn't the language change for you? I mean, you had just gotten your vocabulary down and kind of got your rhythm down. And then there was this whole new vocabulary that popped up for you that you had.
Oh, for sure. I mean, I remember the day vividly when it was like a light switch. It wasn't like a slow burn. It was lots of success on Monday, and then Tuesday, whatever day it was, when this happened, it was, oh my goodness. I literally we had a lot of paper files back then. And so anything that was in process would be a stack. And if your stack on your desk was high, you felt really good about the month because you had a lot of transactions going. And my stack was high. It was very high, probably 14 to 15 transactions, which was a lot for me being new in the business. And they were all in process, like on a Monday, and then on a Tuesday, that entire stack was dead. They didn't have outlets. All the lending dried up. The realtors that were a part of those transactions, they weren't getting paid. The families weren't getting their homes, and it was devastating overnight to realize that. I was like, oh my goodness. But there's Phoenix from the ashes type thing. There's always great stories on the backside of that, and I always love to say that out of necessity is the mother of invention. And so that pushed me out of necessity. I had to become a different version of myself that I've never been, and it pushed me to do something new that to this day has helped me grow my influence in the business across the nation. It's helped me connect with great people like Steven, and we work together because of that. And that's, I guess, what I want to encourage people with is just because it's difficult doesn't mean there aren't opportunities out there. Some can be life-changing opportunities like I found, and I just had to get pushed to do that. And that crazy time that we lived through pushed me to do that. And we're in a similar environment right now. And we just got to kind of gear our mind. It's like a radio, old school radio. Remember when you change the dial and you couldn't hear music? Well, if you get it to the right frequency, you can hear it beautifully. And that's how we have to, our minds have to be tuned in to be looking for those opportunities. And there's massive opportunity right now. And if you're not kind of looking and trying to get tuned into it, you're just going to hear white noise.
Okay, we're going to get back to you on that because you have good stuff, but we got to keep going. But I like what you're saying. I actually really do like what you're saying. I'm like, Brian, that is really good.
Yeah, you should do a show or something.
I know, it's weird. So Steven, with you at the time, I mean, you were with Wells Fargo, or a big bank, right?
Yep.
Yeah, you were a big bank, Wells Fargo.
Yeah, so I started in that time. So I basically was a lowly business banker at Wells Fargo, and I would give referrals to my.
In 2008.
2008, yeah. So yeah, I made the transition. When did you start? So I started in 08.
Wow.
Yes, I was brand new. Yeah.
As the fire was burning, Steven ran into the building.
Exactly. And I'm like, where are you guys going? What are you talking about? This is easy. I heard this is really easy. Let's go. So I was a business banker before that at Wells Fargo, and I used to give referrals to my in-house, mortgage professional, and they'd go so quick. She's like, yeah, they're done. And I'm, well, that's quick. Here's a Nordstrom gift card. I'm like, wow, there's lots of money to be had if they're just giving me money. So she's like, yeah, all you got to do if you ever want to hop to this side is just get a bunch of names, even if they're, all the business people, grab all their business cards. You can do loans for all of them. So I was like, shoot, let's do it. I'm going to give up my salary. I'm going to hop over to this side. I heard it's super easy. I had my little stack of business cards for all these business owners. I was going to do stated. I walked into 08 and it was absolutely, the building was on fire. And I was like, but I have all these cards. I was going to do loans for all these people. And they're like, no, you can't at all. And so,
oh my goodness.
you know, it was kind of the benefit that I didn't know about that side. I had heard about it, right? And I still make Ryan and everybody in our office that was around during that time. I sit around like a little kid and like, tell me stories about 04, right? Yeah, 120% financing one day out of BK. We used to make, you know, $15,000. I'm like, oh my gosh, tell me more. So I started in 08. And so I didn't really know like the no doc, no income, no asset world. And so when I started, you know, after that quick draw stopped for me and I was full commission, like I was like, what the heck am I going to do? It was crazy. I was just remember watching, you know, the implodometer of all the companies failing, and you turn on CNN and oh, there goes Lehman Brothers, there goes, it was like, I don't know.
Everybody.
I thought I made the worst possible choice at the worst possible time with my little family and little kids.
You kind of did.
Yeah, technically I really, really did at that point, but it all kind of worked out in the long run.
That's amazing. That's awesome. In 2008, I had been selling real estate at that time for 5 years, and I was 26, and I thought I was hot shit.
You were.
Oh, she froze.
You were.
I froze.
Yeah.
Am I back?
You can't afford that. You got that dial up.
I know. That's. I know. Darn it. Okay, you gotta let me know if I freeze again. But I thought I was hot stuff. Like on my business card it said multi-million-dollar producer.
Yeah.
In my pantsuit, because I rocked pantsuit. I did. I mean, me and Hillary rocked those pantsuits, and I literally said multi-million-dollar producer. And so I was like, this is totally like this is great. This is awesome. I remember when people would say they wanted to use their VA. We have a VA. I'm like, nobody will ever take your VA. So if you want to know stories about that,
Becky,
Steven,
you're too young. You should not ever have that mindset. That was like an old school.
That was a
myth.
long time ago.
2004 and 5.
You're
Are you
young
kidding
enough
me?
to know better than that. You
In
should
2004, no. 2004 and 5. Focus. 4 and 5.
Yeah.
4 and 5 and 6. Right? If you walked into a house and you had no money, but you had your VA, it was like, don't use that, go 80-20. And everybody went 80-20 because it was like way easier, because VA appraisals are so terrible, which they're totally not. But that was what it was. And so I lived in the world of, my clientele was mostly starting out families like me and just people who were in my age bracket. And they didn't have money. You know, they're paying off student loans and they didn't have money, and they were leveraging other things because that's what you did, and that's what we did then. And then 2008, I remember in 07, I was pregnant with my first son. I left my mentor, who I love to this day. Katina Toskazats is the best. And I started my team in 2007, bought a house in 2007, had a baby, and then 2008 hit, and I was like, what the F am I going to do? I actually was fortunate enough to coast a little bit. I coasted for a while, actually. I coasted for a decent amount of time.
What do you mean you coasted?
Like, I was a true optimist, and I was like, it's gonna be great, guys! Like, the market never drops. Housing's always awesome. Like, that kind of thing. I coasted on my optimism and my being naive, because I was 28, 6. And honestly, the fact that I had a way more business going than most people, most agents. I had more business going. At the time, I was the '1 agent in the office. I was beating Jonathan Harper. I will say that right now. But then
I don't think he had been hired yet, to be fair.
Well, wait, in 08? Oh, 09. Yes, I did. And then he circled back around and like kicked my butt because he was all the foreclosure king. But yeah, I coasted for a while until about 2009, and that was 9 and 10, and that was for me where it was like, okay, anybody who I thought I could sell a house to, every avenue has been exhausted. I don't have in them anymore. They're gone. They've all bought houses, or they've all sold houses. Nobody's left. Nobody's here. What do I do?
Of absorption rate.
Yeah, exactly. Well, and it wasn't like,
Mm-hmm.
yeah. And so for me, you know, my I would say, so '08 happened, and to be honest, again, because I was completely naive, you're talking, Ryan, about Lehman Brothers closing, and this closing, and that closing, and that closing, and I'm like, it's okay, guys. Like, I completely was not thinking like that. If you were to ask my husband, he would probably be like, hell was raining down fire. Like, he would know, but that's what Jeff is my, like, freaking the oracle. Like, so he knows those things. I was just thinking completely different. So I will say, when this whole situation happened, when our governor on, I think it was March 18th, announced that we were going to be shutting in, I literally I noticed in myself, I went into a panic of like, oh shit, we got to liquidate everything. We got to sell the whole thing. We got to have all the money.
Pause right there. That's a very pivotal moment, because in 2007, 2008, we just started spending our equity loans.
Thank you.
Everyone was like, using that to pay for their stuff that they hadn't even, so.
Yep. And that is the key. And that's exactly it. And so I think really more than anything, and I have questions, and I love my Brittany, and she's going to be like, Becky, you didn't stick to all the questions, but I'm going to bounce around a little bit because that's how conversations go. So in '08, what I remember, and it actually wasn't from '08, it was from 10. Because, in when I bought our house, and I'll never forget the lender we used, we did
not
80-20
present
loan.
company. Just so
No.
you know.
Yeah, not present company.
No. So at 25 years old, I bought a $540,000 house on an
$500,000.
an 80-20 loan. So I put $0 down, and it was interest only, and it had no taxes or insurance included.
What could possibly go wrong?
Boom.
What could possibly go wrong?
Boom.
And I mean, I was a babe. I had no idea. And I remember my dad going, I really don't think you should do that. But I was like, I know everything because I'm a multi-million-dollar producer. Wink.
Yes, you
like,
are.
Right?
That's like 4 deals.
What?
That's like 4 or 5 deals.
You should have seen. I've pulled all this stuff out, like the documents. You should see it. He made a freaking ton of money on me. It was insane. So the reality is, I learned out of that for me and my household, after we came out of that situation and realized, wow, 2010 was the rock bottom for us. It was like, we will never, ever allow ourselves to be back at that financial place ever again. And we never have. So for me, I guess if for anybody that's watching, that was the wisdom that I gleaned from that. Was, what were my expenses at that time? I will never do that again. I don't care how much money I make. And I make a lot more money and sell way more houses now than I did in 2008, 9, 10, 11, 12, 13, 14, 15, 16, 17, right? But the fact of the matter is I've only raised the lid by maybe a little, but my mortgage on my house now, and Steven, you just did this loan.
Boom.
My mortgage on this one now is about the same that it was when I was 25 years old. Yeah.
I believe it.
That's crazy.
Just wrap your brain around that. My car payments that, because we're smart and savvy and we have the best accountant ever, are set up, as a part of the company draw, or, company car allowance, the whole 9 yards. They're less than what we paid in 2005 for used shitty cars because my credit was so bad. Seriously, our debt load, it's those things. So I want to hear, now that I've taken time, Ryan, what did you look at from 2008, or 8, 9, 10, I would like to combine it. What did you learn from that to where you are now? What have you taken from those that season of your life? How have you applied that now?
Yeah, I've same take.
Oh, I know you're the same.
Yeah. Same, probably worse or better version of Becky. I'll say a more conservative version of Becky. And you're conservative fiscally, anyways, and I'm probably too conservative.
Let's put it this way: for anybody watching, you, Steven, and I were on a text conversation about if we should buy the land that surrounds us, and I was in, and one of us was not in, and that was more so you.
Save your money, Becky. Save your money. I'm always going to tell you that. It worked out. It worked out great for you.
I did.
It praised perfectly. It worked out great.
Yes.
I know I'm too conservative. So you got to take whatever I'm going to share with a grain of salt because I'm too conservative. You should look for investment opportunities like Becky was just saying. But that's also the scars that I had from 06, 07, 08. Those are legit scars. They run deep, and however many years later, they still power my decision-making ability because of those scars. Now I'm thankful. I'm thankful to learn that lesson at a young age. I also watched people that were getting ready to retire back then not have the ability, not have a second chance, have to retire after the 401k was smashed and they lost their house. We living through that, or our gift was living through it and learning the lesson at a young age, and being able to take those lessons in to our 30s and 40s and go, you know what, I know that real estate doesn't always go up like we always thought, and there's going to be a day where we need a rainy day fund, and I may feel good about my equity position in my house now, but that could change in the future. And so, yeah, my scars run deep, but for me, they're good. I definitely am a saver, and it always in the back of my hand is never getting to that position, because I saw my friends and family and coworkers lose their jobs, raid their 401ks to live, short sell, foreclosure, all of that. And that was tough to see. And it's one of the reasons also I was so passionate about the show, is just making sure that we collectively as an industry, both real estate and lending, never get ourselves back there again with the irresponsible lending. I mean, it's funny now, but we had loans. You were talking about how you're right, like nobody would do a VA or even entertain an FHA loan. We didn't know how to spell it back then. And we just do an 80-20 because it was easier. Maybe not Sloan's clientele. They probably actually did conventional 30-year fixes. They had money and they had assets. Most of our clients didn't, so we had to get creative. And this sounds so absurd now for anybody watching, but this is real. A real loan they offered. So it wasn't a 30-year fix. What you had the option to do was, we'll lock it for 3 or even 2 full years. You get 2 full years with your rate lock. That sounds amazing. After the 3rd year, it's going to start adjusting, but don't worry about that, because things are going to be completely different. You'll have a ton of equity and you can refinance. Oh, by the way, even though your rate starts to adjust after year 2, you have a 3-year prepayment penalty. Think about that. Your rate's only locked for 2 years, but you can't redo anything. You can't sell your house or refinance without a hefty prepayment penalty. That's how backwards the industry was back then.
Do you remember I'm not going to say names of the lending institution that I don't think is out there anymore countrywide, but they had a pick your payment program. And so you could do a 30-year one, or 15, a 30, an interest only, or a negative amortization. And if you were like super struggling, like right now with people, some of them are like, I talked to a client and he told me he put his mortgage on pause. And I went, what? He goes, I put it on pause. I go, no, you didn't put it on pause. Did you sign something? Did you get something? No, but I had a really good conversation. I'm like, no, that's bad. That's not good. Like, that forbearance is not what you think. And don't think it is. And so that was, people would do that, but then it's so easy to get stuck in the rut of like you're paying least, because when you look at the difference of like what a 15-year or a 30-year to like an interest only, you're like, I'll just do the interest only because holla, I got a house. Right. And you're never paying it off. And yeah, so anyway, so Steven, what about you in 08 to like what you learned, maybe like what you had to do coming into an industry that was on fire? Like, what did you learn from that? Like, how does that change your business that you do now?
So what I had to do was literally everything. So I obviously didn't have a name in the industry. I didn't have a database. I didn't really have clients. So I would just scrape, claw, do anything I can. I'd sit open houses, brokers opens. I'd call agents and say, hey, give me the nastiest deal you have that nobody can do. I'm going to figure out how to do that. And I think that's where I learned to kind of embrace the suck of digging into guidelines. So that became my thing, is that I'd get the guidelines out and be like, there's got to be some way to do this. And we start figuring it out. And still to this day, it's something that I do a lot with my business.
Very good.
Figure out. And I don't necessarily work on the nasty ones anymore, because those are really tough. But it helps me with, the stuff that actually done it. It just helps me think about, obviously, same thing as you guys. It was tough financial times, right? I didn't see the good before that. So I went from, you know, a low salary to crappy commission, and then all of a sudden, you know, built this business. So I think it just makes me not taking it for granted. And absolutely, just like Ryan said, I saw people that had, you know, 4 or 5 cars that all of a sudden had nothing. And so it makes me worried from, you know, these times that, I think we can make it through it, because I don't think anything is going to be as tough, hopefully, as that time. But it makes me think that, hey, I'm going to set away financially, because we just don't know when this can drastically change. So help me build that in terms of saving, in terms of diversifying. But I think that's what helped me build, is that I went from this, I'll do anything and everything to try to get this business just to make it through this time. And I think a lot of that is still built, entrenched into my business itself, where I dig deep into guidelines, where I can, you know, help other people battle, because I spent so much time doing that it became kind of entrenched in how I do business.
Everything you just said is basically what KW Bold Pivot is basically saying to do. You have to work harder. You have to work longer. You have to get in it. You get in it. And that's what, as a team, what we've been talking about on our morning calls, it's like, you are working harder. You're working twice as hard. You're working more. And that's what it is. But we have to, just to get ahead of it, we have to. So Sloan, what about you? What was it like? So obviously 08, well, now it's a little different because you're in a different position, but realistically, as a learning and seeing everything, and even as a leader, that has to have changed your perspective completely.
Well, back then there was an emotional and moral change that people weren't prepared for too. And so I saw a lot of people having affairs, not trying in their marriages, not working on their family dynamics. And I'll tell you, that is different now. People are very invested in making sure that they are together, that their kids feel that they're in a safe place, that they're communicating completely different. There's conversations now between families that weren't even available or even acceptable back then.
Honestly, you made that's interesting that you say it, because yeah, you're right. In 4, 5, 6, 7, 8, leading up to that, it's like The Big Short. It's like money was so readily available, and the people that were making it hand over fist. And certain people that we all know that are in jail because of it, because they were in the industry. They were the leading lenders in the nation, in Puyallup, of all places. And they're sitting their asses in jail. Because of that, it was like the absolute greed kept compounding and compounding and compounding. And we bought so much shit during that time. We bought so much crap.
Consumerism was insane.
Oh my God, yes. So
question. So do you think now, because it could go either way, if you're stuck in your house with your spouse, it can go either way, like really good, or it could be, do you think it's better this time around? Because that was a really interesting point that you made.
Yeah, totally interesting.
I really do. And I think there's been that shift where therapies, it's not embarrassing to say you're in family therapy. Yeah. In fact, it's almost something to be proud of, that you are willing to have deeper conversations, to work through stuff. And my children don't expect to have vacations like we used to, or the style of vacations, so because we've all been humbled. Well, we were humbled last time. So back to 2008, my clientele didn't buy, but they weren't selling either. So I was in this weird void where my clientele was able to hold on to their homes. They were selling, I was referring their homes maybe in Utah or New York or Florida, getting those sold, or in the desert. But I was literally thankful that I had a husband that had steady income and benefits. And that's what now people realize, is how important it is to have that steady marriage. And because you do need that support, you do need to lean into those people if you're in commission. And I wasn't prepared. I was very fortunate that we had money saved, but I wasn't prepared for like 3-4 years.
Right.
We were pretty fortunate, but not. There were lean times, and I was probably one of the luckiest. I mean, I saw brokers in my office driving buses.
Mm-hmm. Yeah.
It was tough.
In Game of Thrones, they would call that the long winter. Winter had come, and it sucked. And it didn't last one season. It lasted
Winter's
for
We ate all our
4
beef
years.
jerky in 2 years. Let's just put it that way.
Yeah.
Yeah, it was kind of crazy. I think for some of these brokers now, like for so many of the newer brokers, I mean, part of why last year I actually did I felt compelled to not do a speech, but to lead a class, which was, I entitled it Money in the Market and How You Can Be Ahead of This and How You Can Be Smart. Because I started seeing, and Ryan, you and I had a lot of conversations about this, I started seeing realtors, because again, it's for our colleagues, just spending money, like gobs and gobs of money, and just on all the things. And I mean, I do believe that obviously there is opportunity. You have to, as a business, you do have to spend money. There is a thing, like that's the thing you have to do, but you have to spend it smartly. And like on our team specifically, Brittany and I, we talk about it. It's like, okay, if we spend money on this, is this going to bring any result back? And if it doesn't, then we're like, why are we doing this? That's weird. What's the intention? I would say for agents now that are going through this, that have, or agents and lenders who are going through this, that have never seen a shift, who have never seen a market change, who have never seen really any adversity, because that's what this is. This is bringing out adversity, and we either have to rise up and reclaim our seat at the table or leave the table. You know what I mean? Like, so that's really, what would you say your advice is on that? And I would say, honestly, Sloan, what do you think about like how that is?
I think going back to Steven's point is he was able to build trust with his clients because he got really into the know. He was well-rounded in understanding the ins and outs of the loan process, right? And how to make sure his clients could survive and get what they needed. And I think if brokers don't do that right now, anyone can call for 4 hours. Anyone could do that. But if you don't really understand the inventory, what your buyers and sellers are going through, and really understanding how to help them, guide them, and not just talk at them, they really need to understand the bell curves and the, you know, where we are. And we're not even back to 2015, but there's a possibility by in my opinion, by fourth quarter, our bell curve could look a little different. Our absorption rate, our inventory, our price per square foot is going to be different. So if we're not preparing our clients to kind of think that way, if they have any vision of not having a job in 6 months to a year from now, we need to help them now.
Yeah.
And it's not just caulking and fixing the gutter. I mean, buyers have still, the expectations of buyers haven't changed. They still want the $1 million house, and they're going to, their mind, they have not made that mind shift, and they won't for some time. But our sellers are going to need to be prepared for that, I think.
Totally.
Yeah.
What would you say, Ryan? What do you think? What do you think about? What would you advise the brokers to do? Brokers, realtors, lenders, and everybody in this industry. What would you to do differently, gaining what you know from them?
Well, it's like professional musical chairs, and when the music stops and the state's open, there's not going to be enough seats for everybody, and the veterans are going to expect to have a chair because I've been in the business a long time. So my chair is going to be there. And what I would encourage the veterans and the young people to do is do what Steven did. The reason Steven made it is because he was hungry. He was hungrier than some of the veterans back then. So that powered his and fueled him to get more creative, to dig in deeper, to learn new things. And if you're a young person that maybe just started, it doesn't mean that the chair is not going to be yours. It means you need to work harder and be hungrier. And you might be able to take some veterans' chair. And hopefully the veterans listening, I don't want you to lose a chair either, but you have to stay innovative. You have to stay driven. And there's not going to be enough for everybody. So I say that to encourage and light, hopefully, build some excitement around getting back into business the way we used to, not to scare you. But it's your chair is not going to be there just because you've been doing this 15 years.
You know what? I want to just add, what I see happening truthfully from all of this? I see, because within Keller Williams ecosystem, there's like massive big teams everywhere, right? And I've never had a massive big team. But I see the way team structures, I think I could see how that could change. I really could, because I think if you have this massive big team and you have all these expenses, I see that shifting in this time. I really do.
Absolutely. You and I had several conversations about that. This is like level 3.0, 4.0 stuff. But I love it because efficiencies in running teams is such an underrated concept. Efficiencies of having the right people on the bus, making sure that you don't have excessive people on the bus, making sure that your spend is appropriate. And I'm not saying there's a right or wrong way. If you define right or wrong with what you net out, I guess you could say there's a right or wrong way. But we should be looking at our teams and just making the appropriate moves, because we don't, in an environment of plenty like in 06, you know, I forget the quote, I'm going to find it and show it to you guys later, but you know, easy times make, you know, easy times for a business, tough times make it way more difficult. So you can get away with not making some of those tough decisions in 06, 05, 04. But in environments like this, like you can't have excess on your teams. And so you really got to prioritize efficiencies and how you net. And to me, that's just smart business. Like I'd rather work smarter than harder. So I can work really hard and sell 200 homes, yet it cost me $500,000 to get there, and I had 15,000 people on my team. Or I could have 2 people on my team and sell 100 homes, you know, maybe work a little bit less and net a little bit more type thing. That's level 3 and 4.0 strategies, in my opinion. But it's conversations that people should be having with, like, the Beckys and the Harpers of the world and the Maxis of the world. Like, how'd you build your team? What would you do differently? And they'll learn, just like I did, from their past mistakes. Like, hey, don't do this. Trust me. Let me save you some time. But you know, you and I both were like seeing eye to eye on that conversation, and it really is just a conversation. It's not, you don't have to build your team just like Becky or just like Max or anybody else, but you should be refining your position with other like-minded people.
Well, and I think what will change is, especially in the structure of real estate, because I mean, real estate in general, like the whole idea of like the team concept was a Keller Williams like thing. Cause like there was so many other, I remember when I started and I would say, I'm a buyer's agent. People are like, what does that even mean? Like, what, okay. Like, what is that? Like, what is that? Right. And at the time, in all honesty, like George and Katina, like they were kind of revolutionary because they were one of the first people to have a team. And I was one of the first buyer's agents to be on a team, and nobody knew what the hell was going on. And it was just like weird. But the reality is, I think it evolved into this thing where I would see brokers just take, like, anybody who was on a team. And I think I've always grown a lot smaller because the women on my team specifically know that I'm in business with them. I'm in partnership with them because I'm partnering that I want their goals to happen just as much as I want my own damn goals to happen. So it's like a mutual partnership of work trying to go together. And I think if brokers, and I think what may start happening is maybe that will become the thing of like people looking at it like we're in business together, we're in partnership together to achieve not only the big goal, but like each of our goals. And I think that's really got to be the shift that happens in the real estate industry along teams. That's my perspective personally.
Yep. Yeah, I think it's a beautiful thing.
Sorry, go ahead.
Oh, I was gonna say, raising the level of professionalism is an opportunity right now too.
Absolutely.
Yeah, I think even for the people that aren't teams, because I have one assistant and she's amazing. But I was in a class, I think Liz Johnson was talking about it, and she was like, every once in a while, just shut off your debit card and mark it, whatever, gone, get a new one. See who gives you a call and see what you have in recurring payments, because it's crazy. Because during the great times, right? People call, it's a lead system. Here's a new CRM. Here's the greatest thing. Auto pay. Boom. You don't even think about it in the good months. It's like, whatever, it's coming out. Call and stop that. If bills are a problem for you, shut that off. Mark that debit card gone. Get a new debit card and just wait for that phone to ring. People will call and be like, hey, what's that $150 a month? You're not going to do this anymore? The $250? That could add up a lot, and that can shrink expenses pretty quick.
I have 2 embarrassing stories about that I don't mind embarrassing myself in front of everybody. Maybe they can learn from my mistakes, but I also agree. One of the best things you can do is lose your debit card that has been around for a long time and it's attached to everything. because you have to go back and they'll have to call you to, set up some of those auto payments. Two that I had forgot about for a very long time, we're talking 5 years, was a gym membership. That was at Auburn, and I had lived in Auburn for 5 years. So for 5 years, they got $20 a month. That's not the worst one. I had an auto payment for a car payment, and it was a lot of money. It was like $500 a month. Well, I had paid off the car, but they continued to take the money out of my account. And it was years. Shame on me for not knowing.
What?
But thank God I lost my debit card. And so they called and they were like, hey, we're here to collect, we need this car payment. I'm like, it's been paid off for years.
Oh my God, dude.
There could be a better steward of my money. The positive was, guess what they were doing? It was at Heritage Bank. They were taking it all and putting it in a savings account. So I had 20 grand that had been built up in the savings account because they had nowhere to put it.
Forced savings.
Yeah, isn't that crazy?
That worked out perfect.
At least it didn't go away.
Well, that would have been horrible.
Wow.
The story ended up being good, but how embarrassing not to catch that for that long.
Not alone.
I think that, at the very beginning of this whole situation, at the very beginning of all of us having to get shut in, that was the first thing my coach, and I know Gary Keller, and I know our office and leadership in the office, and really all of us on here were very instrumental about hey, let's focus. What can be cut? Where's the fat and how do we get rid of it? And we cut a tremendous amount out of our own business budget. I think I cut $1,500 out of our business just in one day. And that was pretty powerful because that's those are recurring things that you don't think about. The things that's it's only $299 a month. And you're we'll use it. We'll make sales. No, we're not. We're really not. Even now, this week, in fact, earlier today, I was just going through my life. I can't cut that much more out of my personal life. We really don't have much to cut. And entertainment with 3 kids of all different ages is not something I'm cutting. I'm not cutting Disney Plus or Hulu or Netflix or I don't know, any of the others. I'm not cutting them. They're not cutting out. They're staying. But what I am cutting is we have 2 really old term life insurance policies. I'm why am I paying $100 a month on these stupid things? We have the whole life policy with Tyler Jalseth. Why am I doing this? This is so stupid. And when I called to talk to the lady today, I was I don't even know my account number because I haven't gotten anything for 1,000 years. And it's not very much. It's $35 a month. But she's it's very nominal. And it's for a very good, it's for a $500,000 policy. I'm okay, cool. I've so far given you, calculated up, I've so far given you $3,500 that I'm never going to see back ever. And she goes, well, your policy's for another 11 years. And, I'm getting a lot of people calling in because they're realizing life is short with all this COVID. Life is short. Mortality is short. And I go, I will be living for another 11 years. So I don't want your stupid policy when I have this one over here. So thank you, but give me back my $35. It's just that fact of, I think, looking at all the things. I know it's $35, but it's $35.
But you have life insurance. Let's stipulate that life insurance is still a good thing. And you have life insurance.
Whole life insurance is a great thing because to me, that's my forced savings. That's me going, all right, it's over here. It's over here. It's over here. And I have money sitting over here. Personally.
So you cut your life insurance, but not your wine membership? Is that what I'm hearing?
That $35 buys another handle of vodka. Okay, no.
Priorities.
Fine.
I'm embarrassed to say, what's the difference between whole life insurance
and term?
Yeah.
So the term, I've been spending, in this situation, we got started really young, which I think was a good thing for us at that time because we didn't know, you never know. We got started really young, and I wish I would have done whole life. I wish I would have done it, but we didn't have the money. We financially didn't have the money because it's way more expensive. So I've paid in stupid amounts of money to the one, and then stupid amounts of money to the other. So probably over the last, 10 years, I've probably spent $10,000, $11,000, $12,000.
I'm gonna go into my file drawer and figure out what I.
Yeah, I've spent nothing. Now, granted, if I were to kick the bucket, or my husband was to kick the bucket, which, let's be real, we were in our 20s and 30s. We were really, I mean, probability-wise, on an actuary scale, we weren't going to kick the bucket anytime soon. But if we were, there was money there. In this situation, when we switched over 2 years ago, and added apparently a third policy because I forgot about the other two because they always came out of my bank account and never paid attention. Right? And I'm like, it's only $35. Okay, well now I'm like, it's 35 plus 66. That is $100. And I'm not having you take my $100. No, I'm not. So in this situation, our whole life, after 20 years, after we pay 20 years of it, like we have that money. Like that's tangible asset money. And so for me, it's just another, honestly, it's like another, I don't want to say investment vehicle, but pretty much. Like basically, what, in 20 years, how old will I be? 50,
Not answering that.
58. I will be 58 years old. So why are you laughing at me?
You're so young.
Hey, you youngster.
I'm not so young. No.
That's
Bless
young.
their little. Oh, I see all those sweet little things. I have like sweet little clients who are like almost 30, and I'm like, oh, I remember that. Oh my goodness, it's not in my life anymore. I'm having gray hair. I was watching Outlander, and I'm like, I think I might just let it go gray like Claire and just be like, oh, very like I'm prestigious.
I'll take that back. I'll take that back. That's not happening.
I got a few grays coming in.
Yeah,
I gotta
Ryan's
do my
got a
roots
couple.
again. Gotta do my
Gotta
roots.
get touched up. A little balayage.
I got my hair did.
Oh my gosh.
Okay, wait, but seriously, your guys' hair for the men. What about your COVID hair? Is your COVID hair real, or does somebody in your life know how to cut your hair?
Mine's long.
I'm getting haircuts.
Mine's hella long.
Yeah, yours. Okay, you and Jeff. Jeff has the same problem.
I'm hiding under a hat.
Jeff is like this close to like. He's like, I'm gonna shave my
Cut it
head.
all
Like,
off.
I'm not letting you shave your head. No.
Yeah.
No.
It's not worth it, Jeff. Don't
Tie and
do
tie,
it.
baby.
Said
Tie
no.
and tie.
When I met him at church, mind you, when I met him at church, I literally thought, I'm not even gonna lie, he had just came off of a 40-day fast, true story, and he had a bic razor, a bic shaved head, so he had no hair, so he looked like a little cue ball. He had no hair. He came off of a 40-day fast, and he was working graveyard. And I thought, when I was nice to him, because I was like, oh, you're dying. Like, what's wrong with you? I am so sorry.
Oh my god.
I want to see pictures.
Oh my god.
Oh yeah. So that was the stipulation when we started dating, and I was actually like, I sort of like you.
You were
when-
Jeff's Make-A-Wish.
I was. He joked about that. Like, he was like my Make-A-Wish kid. Like, yeah.
Aww.
And so when he started to, like, when I told him I was interested in him and I would pursue this relationship as well, I was like, hair is sort of it's a kind of a prerequisite. Like, I need you to grow hair. You can't have this cue ball head for him. And that was what it was. And he was like 140 pounds soaking wet at the time. So just wrap your brain around that. Like, it was crazy. He was a tiny, yeah.
That's awesome.
Yeah, that was
How
my
many- Becky, how many texts you getting right now from Brittany that you're completely off the rails?
Yeah.
I don't know. Brittany, are you texting me right now? No, I'm
Question
not. Okay.
No,
7,
she
Becky. Question 7.
Yeah.
You know what?
Question
No.
7A. 7A. You already did 7. You need
Okay.
A and B.
I
now.
will say this though. I will say this.
What?
In that time, did we lose? I mean, you probably saw a lot of peers leave the industry, correct?
Correct.
Oh, yeah.
Do you foresee many of our peers leaving the industry now?
I think there was a NAR stat before COVID that said that there was a big exit coming just from a normal shift. So I feel like that the answer on lending and real estate side is that there's a lot of people that aren't set up. Maybe that they're into the career anyways. They're just going to cash.
He froze.
Steven,
Lots of people that what?
you were frozen.
You froze.
You froze.
Oh, I was?
Yeah,
Yeah.
you did.
No, yeah. So the answer is yes. Sorry.
Yes. Okay. What about you, Sloan? Do you think that will happen? Do you think that there will be a shift a little bit in just like our
Especially
respected?
people that haven't been really running their business like a business. And I was one of those at the last downtime. I was a mom. I was going to every pumpkin carving party and everything. I wasn't really focused on my business. I was lucky, very, very fortunate.
Yeah.
But if you don't have a big nest egg to clientele to rest on and to ride the wave with, you haven't built that clientele and that trust with them. You're not running and looking at your profit and loss, and like you said, really understanding the difference between life and whole insurance. I mean, little things like that, really taking the time to really understand where your money's going, and then putting it aside for real family time. No regrets on any vacations we've ever had. None.
Yeah. Salone, what is the difference between this market and like what would you say is different between now and what we experienced in 2008? So brokers can understand. And then guys, I'll ask you the same thing. So what do you think is different between now and then?
Back then it was very reactionary. And we didn't have to justify the decisions because we had a good curve before that we could guarantee if you bought in a certain zip code, you'll make $20,000 in 3 months. You'll have instant equity, and so those kind of margins were just guaranteed. I used to be able to say, buy this house and I'll make you $100,000 in a year. I mean, I said that and it happened for years, not just a couple of times. But so, you start to believe your own talk. And that's what you've got to be careful of right now, is just because you stuck a sign in the yard and you've gotten a sale doesn't mean that you really know what you're doing. That's where it exposed who really understood what their job was, how we're really here to serve people. We're here to help people through and strategize and make wise choices. We want them to stay in their home. We want everyone to own a home. We want everyone to own a home. If you don't believe that and you're a realtor, then you shouldn't be in real estate.
So service and knowledge is what I'm hearing, honestly. Like
Okay,
the people, right? But like the people that know, like right now, especially really leaning in to knowledge, leaning into more service. Like Bold is calling it care calls, which, calling the people and just, you're leaning into that.
And it's sometimes telling the client what they don't want to hear.
Yeah.
Sometimes, many times I said, no, we're not selling your home. I think I better sell. Nope, we're not selling your home. Are you sure? I'm like, nope, we're not selling your home. And then a year later, they're like, oh my God, thank God you said that. And there was times where I really needed that sale.
Yeah.
So, but I knew enough that I could say that in my heart.
But that's being a fiduciary versus functionary realtor in that case. Yeah. Ryan, what do you think? Because we have like 7 minutes, but what do you think is the difference between now versus then? Go.
The difference now is the base of real estate lending is very strong, and it wasn't then. It wasn't built on a solid foundation. I want realtors and lenders to understand it. It is built on a solid foundation. Anybody that's been in a house recently has been vetted through the underwriting process. They typically have a 30-year fix. They have equity. So while it's difficult now and there's industries that won't fare well, like restaurants and entertainment, real estate and lending will fare well and come back very strong because the base of the foundation is very strong. But that doesn't mean, to my earlier analogy, there's going to be a seat for everybody. And that should fire you up to be innovative. What I want my realtor friends, because it's different for lenders, we have excess business. So we have a lot of business over the next 3 years. So it's not going to push anybody out of the business because we have too much business in a low rate environment. My realtor friends, what I really want them to do is get real clear on their value proposition. Sloan, if you went to your entire team and made them tell you what their value proposition is, I love them all, but probably 20% are going to know truly what it is. And if they may say, well, list a house. Well, guess what? So can Zillow and Redfin. That's not merely your value proposition. Going really deep and challenging yourself that you may have to go away for a weekend and ask yourself some tough questions. What truly is your value proposition? It's the most important exercise you could do right now, coming out of COVID with a clear vision of this is how I'm going to help. This is how I'm going to stay here. This is how I'm going to claim my seat at the table. And here's my value proposition that sets me apart from everybody else in my community.
That's good. Stephen, what would be, not to throw you under the table here, but what is your value proposition? Do you know that?
Oh,
well, he talked about it earlier, talking about getting, you know, diving deeper, working harder when other lenders, you know, are like, oh, I don't want this tough deal. You know, maybe it's a bond loan. You know, Stephen's always been like that because that's what created him. To his credit, when people were losing his job back in 2008, he was hungrier, and that built the version that he is today, which is still a hungry loan officer that's willing to get creative and do loans that other people aren't. That's one of many value propositions. Most people that kind of just have it easy, like, oh, I'll just take the 20% down A-paper stuff. You know, you can have that bond loan, you can have that, you know, whatever tough deal.
That's why I use him, Ryan.
I just wanted to try to answer one of the ways.
I appreciate that.
Yeah,
mine's really about, my value proposition really centers around customer service. So we try to take a really hairy process, and it is what it is, right? Because of 06, 07, 08, things have swung, the pendulum has gone this way now, and people have to dot I's, cross T's, redo it, write a letter, explain this, talk about that, because of that, because we've been hurt before. So we try to take that big process, which for some people might be the largest financial transaction of their entire life. Maybe they do it a couple times a year, a lifetime. And we try to make that as customer service friendly as possible. So it's something that we tweak and retweak all the time to make that as good as possible for that consumer. So that's really our value prop. That's what we live for. And I think the good news with this one, Ryan hit it on the head, is rates. Interest rates help out lenders, obviously, with refis, but in terms of purchase, like to have something in the 2s and 3s and things like that, tremendous asset to have in our back pocket. Because I remember when I first started, I would call people and be like, hey, do you want to refinance? I don't know what that means, but let me just ask you this question because someone told me to. And they'd be like, call me when it's under 6. And I'd be like, under 6? What are we talking about? What is this, Oz? So the fact that we have 2s and 3s now is a tremendous time for not only people that have to refinance, but for the purchase person that comes in here. And now we have these programs to help them out, or 3% down or 3.5% down, tie it with a great interest rate. It's a great way. It's a great time for people to be able to have the opportunity to buy. So I think that's what helped us a little bit in this time versus 08.
Well, and to end on that, I mean, that's how we bought the property that is now connected to our house, because we were watching the rates. You locked us in at a rate. We were able to make it all work. And I mean, we're in at a 3.25% interest rate, which is so stupid. Like, that is so awesome and so crazy. And I mean, my interest only story from 2007, we were at like, I think a 7.14% interest rate or something like that. Sweet. Yep. No, horrible. So
can I sneak something in before we go?
Yeah.
Just because, you know, the process of, if anybody listens and actually takes this challenge of, let me get real clear on my value proposition. I hope you do, because it's so important, and you'll love the fact that you did. It doesn't have to be this grandiose task. So for Stephen, it's very organic. He used to work at Nordstrom, and everybody knows that if you go to Nordstrom, there's an experience there, right? And so Stephen and I have always talked about, how can I take this root canal of a process, a loan process, and make it like a Nordstrom process? That's a very organic why and value proposition. And it's not easy to do that because it is a root canal. You just went through it, Becky, right? There's lots of paperwork and lots of landmines, but his drive and what sets him apart is trying to make that root canal like a Nordstrom experience. That can be part of your value proposition.
One of our values, one of what we say is we're a Nordstrom experience with Amazon expediency.
Yeah.
Ooh, that's
so
good.
You've already done the exercise, but that's also why you're a baller too. Yeah.
I mean, at the end of the day, my clients, if I'm listing your house, because listing and buying is totally different, but to list your house, we are here to net you the most amount of money in the least amount of time with the highest level of service possible.
Is that how Becky does it?
No. That. So that being said, thank you guys for being my lovely guests on our happy hour. And I already finished my drink. So.
I forgot to get one, so I'm heading down to the kitchen now.
You gotta catch up.
All right, thank you guys. I'm excited for a real happy hour. I keep saying that. I'm really excited for a real happy hour.
It's close. We feel like it's close.
Soon.
I know.
Soon.
So.
And Sloan can meet Ryan for the first time in real life.
In real life.
in real human life.
Yeah.
That's it. Alrighty, guys. Thank you so much
Thanks.
for
Bye, guys.
joining
Later.
us. Have a great day. Bye.